Is everyone ready? Sarah, are we ready? All right, go ahead and call the Delaware County Investment Advisory Committee to order. Today's date is September 17th, and I believe the time is 9 a.m. 9:05, getting started a little bit later. First item on the agenda is the approval of the submitted minutes from the June 18th, 2020 meeting.
So moved.
I will second that.
Any discussion on those minutes? All right. Sarah, would you mind with the roll call vote?
Mr. Ringel?
Aye.
Mr. Benton?
Aye.
Mrs. Lewis?
Aye.
All right. Next on the agenda, we have a review of the financial report. You'll see first in your packet, hopefully, a portfolio graphic review. That summary provides the dollars that are within the investment portfolio, not including Star Ohio. In Star, which we'll get to in a minute when looking at the more detailed report, there's approximately $238 million sitting in Star as of the end of August, which if you include Star as part of that total portfolio, we have about 70.6% of the portfolio in Star. The weighted average maturity, 2.88 years, the weighted average yield, 1.62. My office, mostly myself, we've worked to diversify the investments given the low rates that we'll talk a little bit more about in the financial market update. But compared to when I took office, we had quite a bit of our distribution of our portfolio in the 0 to 1 year time frame. And granted, there's quite a bit of money in Star currently. Part of that is due to it being near one of its two high water marks since we just had collection at the end of August. And the final settlement has not been completed yet. But the portfolio has been pushed out a little bit longer to try and take advantage of rates that are a little bit higher down the yield curve. Any questions about the graphic before I make some comments on the investment portfolio, the detailed summary? Moving to that detailed summary, the first page shows that 99 million, the book value there for the investments and the breakdown of those categories that were graphically displayed. Looking at the yield to maturity for the investment portfolio, there's only been a, let's see, I think 7.2 basis point decrease from July, which is good in my opinion, considering how low rates have dropped and have consistently stayed and will stay for the foreseeable immediate future.
Sure looks that way.
Yes. Star Ohio's rate today is 23 basis points, and the amount that is currently in Star Ohio is closer to 262 million, up from the end of August, so up by about 30, a little less than 30 million.
Excuse me.
Are there any questions about the financial reports?
Just an observation, the market value of the bonds, the investment portfolio has a nice gain built into it, almost $1 million. So not that we intend to liquidate or sell that portfolio, but
Always nice to have on the books.
yeah, it's nice to have an unrealized gain, and it gives you protection. And, as rates have fallen, our bond portfolio has performed well. We don't have any credit issues in it, which is another major consideration. But so yeah, good. We're in good shape.
Any other comments, questions related to the financial report? Okay. I will go ahead and provide a brief financial markets update. Fixed income assets have generally remained steady due to the Fed's fixed income facilities. On August 28th, Fed Chairman Powell announced a long-term policy shift that will promote monetary policy that could allow inflation to rise above the historic guardrail of 2%, which is a fairly substantial policy change for the Federal Reserve. They had historically used 2% inflation as a hard line, or one of their major policy tenets to guide their monetary policy and engagement in the economy. But they have, Chairman Powell and several other of the board members have said that they're looking to move away from that hard line of 2% to focus more on full employment, since inflation has not ticked up when the economy was reaching towards full employment in recent history. I anticipate that as a result of the Fed's policy decisions, rates will remain low through 2023, which will be a challenge for our fixed income assets. More challenging is potential market turmoil, which would have investors flee from more riskier assets like stocks into fixed income assets. And there's the potential for some short-term economic turmoil from political turmoil this November. I'm sure as we get closer to November, the markets will become more unsteady, and I anticipate November 3rd, the markets will be fluctuating wildly, but hopefully that'll calm down the day after, if not that week, and that will only be a short-term spike that would potentially reduce fixed income asset rates. The 2-year Treasury yield for today is currently 14 basis points. The 5-year is 28 basis points, and the 10-year is 69 basis points. So the fact that STAR is hovering around 23, 24 basis points still, I think speaks to the management of that portfolio, that they were able to take on some assets that were able to keep that rate a little bit higher. I do anticipate, however, that come fourth quarter, a lot of their higher maturity holdings will start to roll off, and you will see Star Ohio dip down back or closer to the 14, 10 basis point range. I do not have anything else to update as far as the financial markets. Is there any other business to be brought before the Investment Advisory Committee?
What do you think of what the Fed did then, as far as good policy, or is it I don't know.
I think it's helpful for the economy. It's not very helpful if you're trying to get a good return on fixed income assets, because it's depressing the rates that we can take advantage of. The investment portfolio for the county is limited to the assets described in the revised code, and for the most part, that's a 5-year range. There's the exception for political subdivision debt, which can go out to 10 years, but that already compresses an already compressed investment option list, if you will. So hopefully we'll have a quick turnaround in the economy once a vaccine is more widely is available, and we will see employment tick up as well, which I think will encourage the Fed to increase the rates.
They've made it pretty clear they're not going to raise rates for the next couple of years.
No, why, I guess why
It's
do,
unusual for them to be that.
why do that now? I mean,
I think it's a concern with employment, that when employment was increasing probably a year or two ago, that they didn't see a similar uptick in inflation that they had anticipated. So they decided that they will focus on full employment and facilitating full employment with their liquidity facilities. And if inflation does actually start to tick up, and more importantly ticks up at an alarming rate, then they'll take another look at trying to rein it back in.
thank you, though.
Yeah.
Thanks. No, thank you for all the,
I think most experts would agree that after the election, short-term rates probably won't change much. Now, the stock market, that's a whole different story. That's going to be pretty volatile. But the bond market, I think it's going to be pretty steady, pretty low. Keep it. We'll see. I don't have anything else, Mike.
I don't have anything else either.
either.
Short and sweet.
Move to adjourn.
Second.
All those in favor?
Aye.
Aye.
Meeting adjourned.
Adjourned. Aye.
Go back and get ready for our